In January, my private trading community made a total of $29,769 in profits, and it all came from the trades I sent directly to them using one simple trading strategy. In this video, I'm going to break down every single trade and explain exactly why I took them. This isn't a flashy or overly complex system. It's straightforward, reliable, and proven by real results. Let's dive in. The first trade that I took this year was on gold. Here I was on the 1 hour time frame, and the first thing that I did is I marked the major liquidity levels. So in this case right here, I marked this as my upper liquidity level, and then the lower one was this one right here that was swept. After that, I wanted to look for a higher time frame confluence. That's why I hopped on the 4 hour time frame, and I saw that price was rejecting from a 4 hour unmitigated demand level, which was ideal. Okay, so this right here gave me a very good higher time frame confluence. After that, I then hopped on the 5 minute, and on the 5 minute I said to myself, okay, now that I have a higher time frame confluence, I have a hourly sweep on the 5 minute. If I see a beautiful market structure shift, I will take this setup. By a beautiful market structure shift, I mean an aggressive market structure shift. Okay, and on the 5 minute, check this out. Price aggressively broke the structure right here with this impulsive bullish leg. This shows me that the bulls are in the market, which is exactly what I want to see. After that, I was able to identify these two fair value gaps. This is the first one, and the second one was right here. And I wanted to enter the markets on this second fair value gap right here. Stop loss below this leg right here, and then targeting 2RR. This was the exact entry. Of course, I sent it in the group as well. And now let's play the price and see how this setup played out. Right here, it triggered us in. And now let's play the price and see how it played out. We can see running in profit. Let's go on the hourly time frame to play it faster. All right. And TP was smashed right here. And a lot of profits were made with this trade, and I will share them on the screen right now. So yeah, as you can see, this was the first trade we took this year, and it was a beautiful winner on gold. And now we can move on to the second trade. The second trade was on USD CHF. So right here is exactly when I opened the chart on this pair on that specific day. And once again, on the hourly time frame, I started marking my liquidity levels. Okay, I considered this one to be the upper one, and then the lower one was this one right here. So after that, I just waited. Okay, waited for one of these two levels to get taken out before taking the next step. We can play the price, and right here is when the upper liquidity level was swept. Now, you guys already know I like to look for a higher time frame confluence because I'm only taking A+ setups. So what I did is I went on the 4 hour, and on the 4 hour, if we zoom out, and on the 4 hour, I was able to identify this unmitigated supply level. Let me extend it so you guys can see what I mean. If we extend it, we can see that price tapped into this 4 hour unmitigated supply, and I knew it had a big chance of rejecting from it. So this right here gave me a very good higher time frame confluence. I went back on the 1 hour and then on the 5 minute, and now on the 5 minute, I waited for my final confirmation, which was a bearish market structure shift. So let's play the price and see when we get the bearish market structure shift right here. Check this out, guys. So right here, I saw this impulsive market structure shift, bearish market structure shift that showed me clearly that the bears are starting to take control, which is exactly what I wanted. Now, let me identify the fair value gap. It was this one right here, and this is exactly where I wanted to enter the market. On this fair value gap right here, stop loss would have been above the most recent high, in this case right here, and the TP again targeting 2RR. This was the TP. Let's play the price. Right here we got tapped in, and now let's go on the hourly, okay, and play it faster. Play the price, and boom, TP was smashed right here. So we started with two winners in a row. Right here I was up 4RR already in the first 2 weeks of January, and bear in mind I started trading on the 6th of January. So already the month was looking very good. Now it's time for us to go over the third trade. Here I was on the 1 hour time frame, and the first thing that I did is I marked my liquidity levels. The upper one was this one right here that I saw was swept, and then the opposite liquidity level I marked this low right here because these right here, they were already tested. I didn't consider them to be valid liquidity levels. After that, what I saw interestingly was that price was rejecting from this beautiful 1 hour unmitigated supply. Okay, that was a very good confluence. And on the 4 hour, if we go, we can see we have a 4 hour supply right here. So price was essentially rejecting from a 1 hour plus 4 hour unmitigated supply. Because yes, you guys might say, but then this right here is a weak liquidity level. Yes, indeed it is. But the reason I decided to give this trade a chance is because of the higher time frame confluence. The higher time frame confluence was looking very, very good. So knowing that price took out this high, which was the London high, if I'm not mistaken, and was also rejecting from this strong supply level on the 4 hour as well as on the 1 hour, I decided, you know what, if I get a beautiful market structure shift, I would give this trade a go because essentially it's an A+ one. So after that, I hopped on the 5 minute and I waited. Okay, I waited to see if I can get a aggressive market structure shift here. This was an aggressive market structure shift, but no fair value gap. So therefore, I didn't enter anything there. And we can see it would have been a stop loss, okay, if we would have rushed things. But right here is when I received my entry signal, okay? Right here we can see we have the break of structure of this low, okay? Impulsive break of structure, we can see the volume is bearish. And I was also able to identify this fair value gap, okay? So right here on this fair value gap, I wanted to enter the markets with the stop loss above this high. And then of course I was targeting to RR as per usual. Now let's play the price. Right here we got triggered and we can see initially this trade had such a beautiful sniper reaction. So let's play the price and see what happens next. Okay, we can play it and check this out. Break even level was hit. Okay, so right here at 1.4R, the break-even level was hit, and that's when I move my stop loss at break-even and make the trade risk-free. Of course, till here, some people in my community already closed the profits, but I decided to hold it until my full target. And check what happens next. Check this out, guys. Let's play the price, and the price took me out at break-even. So it went super close to the TP. I moved my stop loss at break-even, and then it reversed, and it took me out at break-even. And to be honest, we can see that this trade was such a beautiful one. It had a super cool reaction, but it decided to reverse on me. Nonetheless, I was still happy with how this trade played out. And I was still happy that many people secured some profits on the break-even level. The fourth trade I took was on Euro USD. Here I was on the hourly time frame, and the first thing that I did, as you guys already know, I marked my liquidity levels, okay? This was the upper liquidity level. And then for the lower one, I marked this wick right here because I knew that below that wick, there's definitely some liquidity resting. Now, let's play the price and see which liquidity level will get taken out. Check this out. The upper one was taken out. All right. The upper one was taken out. And as of now, I haven't really seen any higher time frame confluences. Okay, we can go on the 4 hour just to make sure. Okay, check this out. On the 4 hour, no confluence, and on the daily time frame, no confluence either. So let's play one more candle and see what happens. Check this out. Price tapped into this 1 hour VVG. So this right here was a decent higher time frame confluence for me to consider. Once again, 4 hour, nothing else, and daily, nothing else. So the only confluence I had was on the hourly time frame. I knew price was at a 1 hour VVG and could reject from it. Hence why I didn't hop on the 5 minute, okay? I hopped on the 5 minute, and on the 5 minute, I was able to identify an aggressive market structure shift. Okay, right here we can see price took out this high on the 5 minute, and then it took out this low impulsively with this bearish candlestick, okay? So this right here was my entry signal. We have this fair value gap right here looking good. And I wanted to enter right on it, okay? Stop loss right above, which was around here. And then I was targeting to RR as per usual. So now we can play the price. And unfortunately, this trade was a loss. This was the first loss of the year. Still, it was a valid loss, so there was nothing to complain about it, and we just moved on. The next trade I took was on NAS 100. So right here, first thing that I did is I zoomed out to see where we are at, okay? And I saw that price briefly took out this high right here. And I knew for a fact this was a valid high. It was a major high in the markets, and liquidity was resting above it, okay? Then as my opposite liquidity level, I marked this low right here, this valid low. And knowing that this was a major liquidity level, I immediately hopped on the 5 minute because I was expecting an immediate reaction. So on the 5 minute, let's play the price and see if we can get a market structure shift. And check this out. Okay, right here we have a pretty aggressive market structure shift. Right here we took out this low and I entered on this fair value gap right here. Okay, this was my entry. Stop loss was above the high, targeting to RR as per usual. And now let's play the price. This one went into profit, okay, went almost 1 hour in profit, but I didn't got to move the break even, hence why this was a stop loss for me. But again, it was a valid trade, so there is nothing to complain about. Now we can move on to the next one. The next trade we took was on GBP USD on the 23rd of January. Okay, so right here I had these two liquidity levels marked, these two equal highs, and I knew that liquidity was resting above them, and we can see that price took them out. Okay, it took them out right here. And if we go on the 4 hour, bear in mind we were here, okay, at 1,23340, because the 4 hour candle will be fully printed. Price was around here, okay, and we can see it was rejecting from a 4 hour VVG. Okay, the candlestick wasn't closed yet. That's why I set the full price on the 1 hour. Okay, so knowing that, I then went on the 5 minute. Okay, I went on the 5 minute and I played a price. I played a price and waited for a market structure shift. Let's play it and boom, check this out. Right here we have a market structure shift. Entry was right on this fair value gap. This is where I wanted to enter the market, on this fair value gap. Stop loss above this high, okay, and then of course the target to RR, which was right here. Now we can play the price. Right here I got triggered. Look at the timing, okay, it was 17:40 my time, which is 3:40 p.m. UK time. At 4 p.m. UK time, Trump had a speech, and because of that, right on this candlestick, okay, I decided to move the stop loss at break even. And of course I updated this in the group as well for the people to know that it would be best to move the stop loss at break even though this is a good looking trade, because the Trump speech was in 20 minutes, the market could become very unpredictable, and that's why it would have been better to have the trade risk free. That's exactly why we moved the stop loss at break even right here. Okay, now let's play the price and see what happens. Okay, right here the trade took me out. Okay, right here I was stopped at break even with no win and no loss either. But check this out, guys. I want to show you this. So the Trump speech occurs and look what happens here. Look at this huge wick. That's why we don't trade during high impact news, to move the stop loss at break even and make this trade risk free. And check this out, it was a great decision. Why? Because this trade could have been a loser, all right? Because of this huge slippage, because of this huge wick and indecision. Like I said, when high impact news occur, the markets can become unpredictable and it's best to play it safe. So right here, this trade was a valid A+ setup. We were a bit unlucky that the Trump speech occurred, but nonetheless, it was a break-even trade. So nothing to complain about because we took the right decision. The next trade I took was on gold. So right here, I opened the chart on gold on that specific day. And the first thing that I saw was that gold took out this major level right here. The opposite liquidity level was this low right here on the hourly time frame. And after I saw that gold took out this major liquidity level, I said to myself, okay, price could definitely reverse from here. Hence why I went on the 5 minute. And on the 5 minute, I immediately saw a aggressive market structure shift. Check this out. This was right when the New York Stock Exchange opened. Right here, I saw this aggressive market structure shift. Break of this low. Let's play the price to see if we have a VVG. VVG is in place right here. So I wanted to enter on this fair value gap, stop loss above, and then targeting to RR. However, unfortunately, this setup didn't play out as we wanted it. Check this out, guys. Took out the VVG and then it took out the stop loss as well. But again, it was a valid setup, nothing really to complain about. The good part is that in the exact same trade, we were able to take another trade, which was the final trade of this month. So let's see exactly how we were able to end this month of January. So the last trade of the month was on USD CHF. Here I was, okay, right after I took the loss on gold, was analyzing the U-shaped chart, and I marked my liquidity levels, okay? This low right here was the first one, and this high, this valid high right here was the second liquidity level. Basically, liquidity levels are valid highs and valid lows on the hourly time frame. Now, I waited for one of these two levels to get taken out, Okay, I play the price and check this out. We have a beautiful sweep on the hourly time frame. And this right here gives me a big confluence. Even though, let's say on the 4 hour, we didn't have any confluences and neither on the daily, okay? Because on the 1 hour, I see a sweep by the wicks. When I see sweeps by the wicks on the 1 hour, that right there is a very big confluence. I then hopped on the 5 minute confidently. And on the 5 minute, I checked to see if there's a market structure shift. And look what I found here. Okay, right here I saw this very beautiful displacement breaking this high right here, and I was able to identify this fair value gap right here where I also entered the trade. Okay, this is where I entered the markets, stop loss below the low, okay, covering the spreads as per usual, and then targeting 2RR. This was the take profit. And now let me show you how this trade played out. Let's play the price. Boom. Check this out, guys. Beautiful tap in with this wick on the 5 minute. Super good reaction on the FVG. Straight into profit. When I saw this, in my mind, I was like, okay, this will most likely be a winner. Seeing how this fair value gap here was respected. And then I looked in the opposite direction and I saw that there were no gaps to be filled in the opposite direction, which was great because it means that essentially there's no obstacles on the road towards the TP. That's how I viewed it, okay? So let's play the price and check this out, guys. Straight into profit, literally no drawdown on this trade. And the TP was smashed right here for a beautiful 2RR. Of course, this trade ran, I think 3 or 4RR if I'm not mistaken, but I always use a fixed 1 to 2 risk to reward ratio, only taking these A+ setups. So yeah, January was a really good month. Many profits were made, as you guys already saw, and these were the exact trades we took during this month of January. That being said, if you like what you see and you would like to be part of our team, if you click the first link down below, you will be able to apply for the mentoring program and see if you qualify. If you qualify, maybe next month, your profit review will be on the screen as well, if of course you guys enjoy this type of video. Because if you do, at the end of each month, I will make sure to record a video breaking down all of the trades we took and basically showing you all how the month went. Month of January was really good. You guys saw in total almost 30K in profits were made in the community. Maybe it was more, maybe it was less, because there's people that do make profits but don't bother sharing them privately with me. But then of course there were also some losses. So I guess that the number for January would definitely be around 30K, which in my opinion is very good. Also make sure to drop a like and share the video if you found it valuable. That being said, wishing you all the best and take care.